So look here. These are examples of bullish candles. Of course, you should know this: the hammer candle, the wick below, inverted hammer, the wick at the top end of it, and a lot of people. All right, welcome back to the channel, everyone. Thank you for tuning in to today's video. We're going to talk about candlesticks. Traders always ask me, people always tune in, DM me, send me comments or messages saying, Mike, do you ever pay attention closely to the candlesticks? Do they matter to you when you're into a trade? Of course they do. There are different types of candlesticks, and we're going to take a look at some examples on the charts when we talk about supply and demand, and using them as zones or levels to trade from, which I do each and every day. If you're new to the channel, that's how I trade supply and demand. I use a higher base chart to mark my zones, and then I move down to a lower base chart and discuss in detail the strategy and how I trade. Pretty simple strategy if you spend time, educate yourself, and watching the videos. So I would highly recommend getting a pen and pad and going back to the videos and watching them, okay? Now, I will stop and say this right now because I always have people that reach out to me and say, Mike, how can I become an elite member? I see you talk about that on your channel. All you have to do is scroll down to the latter portion. Down where it says in the description portion of the video, there's a link there that says become an elite member. It's only $6.99 and you gain so much value from it. You get the trade breakdowns where I go into detail about the trades I take. I posted one yesterday and I think one a couple of days ago as well. There's already a lot are listed already there, as well as the video playlist. So you don't have to watch over 700 and some videos, okay? Those playlists or link by link series of videos are ones that I've hand selected to basically include all-inclusive the main points, about the strategy and how I trade it, and go into detail about certain topics. So if you choose to want to become an elite channel member, just find that link down in the description portion of the video. Click on it. Make sure that one of those two tiers pop up, that you choose the one that says elite channel supporter or elite channel member for $6.99. That's all it is a month, okay? And what you're doing is support my efforts as a content creator. But we're talking about candlesticks today. All right, because they do matter when the market gets back to key levels or key zones, regardless of how you trade, whether you trade support and resistance, whether you trade, some other level, it could be round number, half numbers, whatever levels you trade from. I trade supply and demand. So I wait for the market to get back to a zone in specific, and then I look to see, okay, how is the market reacting at this zone? Yes, I first look at my higher base chart, and then I move down to a 12 range. But we're going to use the higher base chart just to kind of give reference when we're noticing rejection, because you can actually see the rejection when it comes to the candles themselves, because you have bullish, bearish, and then you have what's called the doji candles, right? And some people will trade specifically just following candle patterns themselves, all right? But first and foremost, what I want to do is, before we jump into that, is just kind of look at the market right now and see what it's doing. I mean, it is bearish. I mean, if you're thinking that it's bullish in any kind of way, then you got it wrong. We are moving to the upside, as you can see here, breaking structure, making higher highs and higher lows. Now, I did have this box right here drawn out. What is this? This is an area of demand resting down here. That's what all demand, supply and demand trading is depicting, picking out, and sizing up and marking off areas on your chart where there's aggressive buying to the upside. This was the breaker structure above here at 747. That's one of the key things that you need to really understand in trading is when you see breaker structures, because you may have major breaks and minor breaks, okay? But we're talking about a breaker structure here. I was marking this zone off for it to come back to this area of demand that rested right down here on the latter portion of this leg. That's very important and crucial. After the market breaks structure to the upside here, you got to understand, will it come back here, here, or here? It's always best to get into, or try to get into the trade somewhere between the 76.4 and down here where the market started, making its move to the upside. I don't trade fibs, but I'm just telling you, based on specific legs, when the market breaks structure, do you want to buy the highs or do you want to buy the lows of a leg? It makes sense to buy the lows, right? Now, as we can see, the market never came down there and tapped into it. It just blasted up to the upside. Thing about trading is that people don't understand, traders don't understand, the market's going to do what it wants to do. You have to understand it. Can it come back down here and test this zone? Yes, it definitely can. But we have to pay attention to price action once it gets down there. Now, let's get back into what I was talking about candles and looking at some examples, all right? I'm going to bring up a few different images of what I want to show you. First, we'll take a look at the bullish candles, some bearish, and then dojis. And we'll look at examples here on the chart to kind of, dig in a little bit deeper so we can grasp an understanding when the market gets back to certain zones. I'm going to show you several examples what it looks like when it comes to rejection, either at a supply or demand zone, okay? Because we're talking about that rejection, looking at candlestick rejection patterns in a sense. Okay, did we close bearish into a demand zone? Did we close bullish into a supply zone? And looking for rejection to see, okay, what is it trying to do, you know? And then if we start to see if we're at an area of demand, say for example, and it's pushing away from that, remember what I talk about? The market taps right into a demand zone and wicks right away from it without closing into the zone. That's a high opportunity or level of interest in which they do not want to push lower. And the same thing in reverse if we're at an area of supply. So let's do that now. So this is an example of what I was talking about where the market comes into a zone. This is a demand zone right here. You should know this by now. Aggressive buying to the upside. It comes back. Now this is a doji candle. There's no body to the candle there. But what happens is it doesn't close on the inside, meaning the body of a candle closing inside the zone. I talk about when the market wicks a zone and then all it does is wick it and then it moves to the upside, all right, quickly and swiftly. If you notice here, this doji candle with the wick of it pushes up. I mean, it comes into the zone. There's no body that closes into it, but the next candle is a bullish candle, okay? And it closes to the upside, and that's a momentum candle right there, so you can go long. I'm not saying off the higher base chart. I'm just saying we're looking at reaction from a bullish momentum or a bearish momentum standpoint when it comes to once the market touches a zone. Is there going to be a continuation of bearish sentiment to the downside or bullish sentiment with momentum to the upside? In this case here is wicks it and then pushes higher. So that's an example of what I was talking about the market wicking a key area. And just like right here, you see this supply area, all right? We breaking structure lower here, aggressive selling to the downside. Market retraces back to the zone. There's not a candle when the market taps the zone that closes into a zone, meaning a candle that closes right into the supply zone there. We get the first touch of a body of a candle in general, meaning the wick or the body that taps the zone, but the wick of this bearish candle, which is beautifully a nice sign that they want to push lower. So we got bearish sentiment there because we get the wick of a bearish candle that taps the zone and the body of it closes to the downside. That's bearish interest. That's they want to push the market lower. Now, you gotta be careful because you always have to pay attention to price action as well. But we're talking about candlesticks and allowing them to really give us some idea, okay? Some possibility of suggestion what the market is going to try to do once it hits a key area or a zone. We're talking about supply and demand here. It taps into it, and again, this is off a range chart. So I'm talking about looking at and learning how to use the candlesticks using range charts. All right, so it taps that zone, wicks away from it, the body closes to the downside, as you can see here. Now this candle may look like it's going to be bullish to the upside at first, but then it turns and closes below. So with bearish candles, you have to look at to where they close at the body of them, all right? And also you look at where the wick is. So it looked like it was going to close maybe to the upside, but it turned back around. The wick was at the top, okay, and the body was at the bottom. So that's when the wick is at the top and the body's at the bottom, that's a sign of bearish sentiment, okay? All right, so let's look at some examples here. I'm going to show you. First, we'll look at just a few charts with examples to show you that what bullish candles versus bearish candles look like right here. And I want to say this right quick before I move forward. This was a beautiful demand setup right here. Now a lot of people won't take this trade because they don't quite understand what took place here. The market broke structure to the upside here. If you look to your left hand side of your chart, you really have to see it. That's why I had these red lines drawn. It broke above this area here sitting at 70, okay? It broke above that structural area right there. It's a structural break above 70 right here. If you go here, we're looking at the 60 range chart. Okay, just going to kind of blow this up. It breaks above there. Now, this was the swing to the upside that broke that area structure, as you can see. Now, when the market pulls back, this is a demand zone, and all they did was swipe. The institutions love to do this. They will retrace the market back or pull it back to stop traders out. They know people have stops resting right here. And look what they did. You had your stop resting right here at 713. They just came down to 711 and a half or 712 right there. Maybe 4, 5, 6 ticks right there. Ran your stops and then pushed the market to the upside. All they did was wick right below a key area of demand, and the market turn the market back around to finish out playing orders or filling orders they have resting right here. There's a void, there's imbalances, there's a gap right here. So when the market gets back there, they're going to finish filling the rest of those orders. They leave these type of footprints all over the chart. So this was a beautiful demand setup to take it back up here to this area towards the highs up here. So if you got into this trade somewhere down here and took it up here, you were golden. I'm talking about somewhere in between maybe 20 on up to 30 area, somewhere in there. Okay, this is off the higher base chart. Now we want to move down to a lower base chart, of course, which I talk about here on the channel in the strategy and how I trade, moving down to my entry chart, my 12 range chart, to look for a precise entry point at a key area of demand on the 12 range chart, not my higher base chart, but I'm just using the 60 range because that's where I mark my zones from. But look, it pushes right up there, back to the upside, and you could have picked up 10, 20, I mean, definitely 10 points, but at a minimum of 20 points or more off this trade right here, okay? So anyways, let's move on talking about what I wanted to show you today in reference to candlesticks and how to trade them and use them when trading range charts, okay? So look here. These are examples of bullish candles. Of course, you should know this, the hammer candle, the wick below, inverted hammer, the wick at the top end of it. And a lot of people will consider this to be like a bearish candle in a sense, but because the body closes to the upside, even though we have the wick to the upside, it's still included to be a bullish candle. And then you have like the bullish three-line strike candles, the bullish engulfing. So these are just candle types or types that you will see on charts, and they're important because if you pay close attention to how what the market's doing at a zone, what types of candles are forming, meaning the pattern in which they're forming. Maybe a bearish candle closes to the downside, then a bullish candle closes to the upside, then another bullish candle. Well, that's bullish momentum. You want to be looking to get into a trade, right? So these are just the different or various types of bullish candles to take a look at or pay close attention to when the market gets to a zone. So I want to show you an example of bearish candles right now. And these would be like your bearish candles right here, okay? Or examples of them, all right? The hanging man, where the candle pushes to the upside. And this could be considered as a bullish candle because we're actually showing interest to the upside, okay, as the market pushes up, but it closes, the body of it closes to the downside. So if you think about it in terms like this, when the market, for example, we come back to a demand zone, and you see this wick right here that taps the demand zone, but then moves away from it, okay? But the body doesn't close into or at the zone, all right? It closes to the upside in a sense, meaning the candle's moving away from the zone. The body does close to the downside, but this could be considered as a bullish candle as well. If, you know, determining or when the market gets back to a zone, how that candle actually forms. Now, it does form, moving to the upside. It wicks away from a zone if we're at an area of demand. And I just showed you examples of what I'm talking about when the market comes back to an area of demand and wicks away from it. This could be a bearish candle that closes to the downside, but it could be the first instant to where things look like they may be trying to turn around because there was interest off this candle here where the market did move to the upside even though it closed lower. Now, this is a shooting star candle here. Of course, any candle that pretty much closes to the downside, okay, and you have the wick above it, you have to think about it that if it's, for example here, if this candle here, you saw it tap into a supply zone, the wick moving away from the zone or level back down to the downside and the candle closes lower, that's bearish interest, okay? And think about that the sentiment is of the market is trying to move lower. So this is definitely a bearish candle, a sign of a bearish candle, all right? But again, these are just types of candles or bearish candles that you'll see. Candlesticks, continuation, you have the bearish engulfing. Engulfing candles, all they do is you may have, like right here, a bullish candle, and then you have this nice bearish candle that engulfs the whole previous candle, that bullish candle, okay? And that could be, you know, in reverse of when we're looking at from things from a bullish candle standpoint where you have a small bearish candle, but then you back to the upside, the movement, you have a nice bullish candle that engulfs the whole candle in a sense, all right? So that would be a bullish candle. Different types of candles here, the evening star, you know, the falling three methods. So these are just different types of bearish candles to pay close attention to in relation to their patterns and how candles form, because candles can tell you a lot about what the market is getting ready to or trying to do. All right, so let's move on to the last part. And these are just neutral candles in a sense. You know, a lot of people like to call them like this is a doji right here. When you see candles that just like have like a a line in a sense. Think of in terms of like that. But they have no body to them at all, or maybe just a slight little dash in between the upper part and the lower part. But there's no actual meat to the actual candle, meaning a body structure, whether it's small body or bigger body. That's a sign of indecision in the market. Okay, the market, you're not quite sure which way it's going to go, and the market doesn't really know what it's trying to do. It's trying to fool you out. So stay away from candles like that and pay close attention to the candles that follow them. Okay, right after, whether it's a doji candle, okay, or indecision candle, and then the next candle at a demand zone pushes to the upside. I showed you an example of that with that candle that wicked the zone, but there was no body to it. And then it transitioned with the next candle moving to the upside, where you had a nice bullish candle that closed to the upside. That's a bullish momentum candle. So the interest was for them to push higher. So when I say speak of them, I'm talking about the institutions. Now, if we think in terms of a candle, whether it's a bullish candle or a bearish candle, you only have two parts. You have the body, and then you have the wick. Both tell a specific story, or have a underlying story in a sense. Because when it comes to a bearish candle, for example, like this one right here, let's take a look at it. I'm gonna blow it up. This candle here is a bearish candle, right? If you look at it, it did at some point had pushed higher, right? But the wicked away, moving to the downside, that should tell you that there's still bearish interest, and they are still pushing the market lower. Now, when a bearish candle, you're going to have, and in all candles, you're going to have an opening and a closing side with the wick as well. In this candle here specifically, this is the wick. That's the top end of the wick there, and then it moves and transitions to the body. This will be, and so basically what it does is opens up, if you pay close attention, it opened up right here where that top of that blue line is. Then it pushed up at some point, and then it pushed up, causing this wick, but then the closure part of the body is down here at the latter part. Okay, so pay close attention to bearish candles, how the wicks are. Sometimes you have a wick at the bottom. And let me say this though, okay, the beauty about trading range charts, it eliminates a lot of those candles in a sense. Well, I should say at least the bullish and bearish candles in reference to, where you may have a bullish candle that has a wick at the top end of it. You don't see that in range charts. You're either going to have a bullish candle with the wick at the bottom, or a bearish candle with the wick at the top. Simply put, as that, okay? Unlike time-based charts, where you can have those variations where you may have a bullish candle with the wick closing, with the wick at the top, and, let me show you right here. Let's take a look at it again. Okay, I'm bringing it back up for you to see. Right here, look, see that inverted hammer candle right there? You're not going to see that on range charts, okay? It's the candle, when it comes to bullish candles, you're always going to have the wick at the bottom on a range chart. You're not going to see where you have a wick at the top of the body on a bullish candle. And then, in reverse of that, if we look at like a bearish candle, you're not going to see where you're going to have a bearish candle, as an example right here, with the wick at the bottom. You're always going to see a bearish candle. It's always going to have the wick at the top. All right, I just want to show you that. So that's why I like trading range charts as well. And as you can see here, you don't see that type of activity. When the market gets back to a zone, say for example, like this zone right here. All right, look, the candle here, there's a small wick at the top, bearish candle. Next candle that formed was a bullish candle. The wick was at the bottom, pushing to the upside. All right, example like right here, I said, bearish candle to the downside, wick at the top. Bullish candle, wick at the bottom. So with the bullish candle, the wick's always going to be at the bottom. A bearish candle, the wick's always going to be at the top. So pay close attention to those type things again. Demand zone right here, again, pulls back. Small wick at the top of that bearish candle, small wick at the bottom of the bullish candle. So with a bullish candle, as it's moving away, the wick's going to be at the bottom. With the bearish candle, as the wick is moving away to the downside, the wick is going to be at the top. All right, so let's look at some other examples right quick. All right, bearish candle right here. What? The wick's at the top. The candle's moving away. The body of it, boom, bearish sentiment to the downside. This was a demand zone right here. Look what happened when it came back into it. Yes, we closed into the zone, but the next candle that formed was that bullish candle with a small wick at the bottom. Lots of momentum. Okay, that means there was lots of orders in this candle here with lots of interest where the market was pushing to the upside. Okay, so when you see big candles like that, even though we got the closure into the zone with this one here, And then the next candle, that close was that bullish candle right there, big body on it. It engulfed the body of the bearish candle there. So that's a lot of, momentum to the upside, showing that the direction where they want to push to is pushing higher. Let's go back and look at some other examples right quick. Bearish candle right there. Bullish candle right there. Wick at the bottom. The body doesn't close inside the zone there. All right, we got this bearish candle, but it doesn't tap the zone. That bullish candle, the wick of it tapped, moved away, the body closed to the upside. Bullish momentum interest to the upside there. So pay close attention to candlesticks. When they tap into a zone, they tell a lot. They tell a lot to the story when they get into the when they finally tap the zone. This right here. Supply back up to this area right here. As you can see, pay close attention. What happens? That bullish candle finally taps into the zone right there. As you see, right? The wick of it is at the bottom. That's what I'm talking about when it comes to range charts. You're either going to have the wick at the bottom of a bullish candle or the wick at the top of a bearish candle. You're not going to have that confusion stuff that goes on with bearish. With a bearish candle having a wick at the bottom, or a bullish candle having a wick at the top. Okay. All right, so let's take a look here. Market pulls back to the supply zone. What do we have after it taps in or hits that zone with that bullish candle there? All right, look. The wick of that the bearish candle opens up right here. It pushes up, doesn't close, it closes to the downside. So there's interest to push the market lower. I wouldn't be interested in looking for, well, when I see that, I'm not saying, what I'm trying to say is that I won't get into the trade right off the 60 range chart. I move down to my lower time frame. By the time that bearish candle closes to the downside, this is the close of it right here at 17,325 area. And then I start to see the formation of the next bearish candle to the downside. Yes, when it opened right here at 325, 17,325. It pushed up some and then start to close lower. You could aggressively get into the trade. Sometimes I will, or wait for that break in the close of the candle. That's what I talk about, 17,313. You know it wants to push lower. All right, so another example right there. Let's move on. Pullback, supply right here. Wick of the, not wick, but the bearish candle. Actually, the bearish candle. Let's move this a way and see. The bearish candle is not the one that tapped the zone. It's the bullish candle is not the one that tapped the zone. The bearish candle is the wick of that bearish candle. Put that back there. Bearish candle taps into it. No closure of a body of a candle into the zone. You see the wick that taps in off that bearish candle right there. I know it's kind of foreshadowed, but let me blow it up a little bit for you to see it. Right there. Look what happens. The body closes to the downside, so it pretty much engulfed the whole body of that bullish candle to the downside. Loss of interest to close lower. Again, the wick's always at the top of a bearish candle. Again, I just wanted to show you when looking at candlesticks and trying to, or reading them, it's all about reading candlesticks off of the range charts, or in particular any chart, but specifically when we're trading range charts, what we can look for at supply and demand zones or any key level in reference to candlesticks on range charts. All right, again, we don't have that confusion when it comes to like other charts like time-based charts and having to depict a different types of candle patterns or candlesticks that actually form on the charts. So that's another reason why I love talk about trading range charts. You don't see all those big wicks. That confuses me. Even when I never traded time-based charts, but who hasn't looked at them? It's cleaner to the eye to me, and that's why people always ask me, well, why do you choose range over time? I can't answer that 100%, but because I never traded time-based charts, but in looking at time-based charts, I prefer not to trade them just for my own opinion, because it's just, I don't know, it's just cleaner to the eye with range-based charts. All those big wicks and in between the bodies of a candle and all that stuff, it just confuses me. I tried to make my trading as simple and simplistic as possible without all the confusion in between, and range-based charts are just cleaner to the eye for me. If you trade time-based, tick or volume, whatever charts you trade, then continue trading them. I'm not trying to persuade anyone away from what charts they actually trade from or use. All right, but this video here is just really all about reading the candlesticks in reference to the range charts and being able to depict at certain zones, at key levels, what to look for. Are we still having bearish sentiment or bullish momentum to the upside, or things like that. So hopefully this resonates and it helps a lot of individuals out there. And if you're a first-time viewer here on the channel and not a subscriber yet, go ahead right now, click on the sub button, become a member or subscriber here to the community. Loads and lots of valuable content information that I give away here on the channel and talking about. I have lots of videos. We have had so many people who have found success through watching the videos and educating themselves. I don't have a mentorship program. I don't have a trading program or course. If you watch the videos, you'll pick up on the style and how I actually trade, and you can do so and find success for yourself. We have people that are part of our Discord community that have spent time watching the videos. I have countless people that have passed so many different prop firm evaluations and sent their certificates and showed them amongst the community. You know, they passed the evaluations. Lots of them have funded their own accounts. We have people who are successful just simply by watching the videos and picking up on the simple strategy and, you know, just how I trade. Not telling anyone to trade like me. I'm just saying that trading can be easy if you make it simplistic. But first and foremost, understand one thing. That's master market structure and understand price action, all right? Don't overcomplicate things with a bunch of indicators on your charts. Again, if you're not a subscriber, go ahead and click on the sub button, become a member. Make sure to turn on all your post notifications so you never miss one of the uploads here on the channel. If you want to join the elite membership program for $6.99 and give you that extra bit or piece of material when it comes to me breaking the trades down, as well as the video playlist and all the little other small perks and rewards you receive, part of the YouTube tier program for supporting my efforts as a content creator, find that link down in the description portion of the video, or simply click on the join tab right there in front of you and you'll see 2 tiers pop up. But make sure to choose the one that says elite channel supporter so you gain access to the private community here on the YouTube channel, okay, with those videos, all right? But outside of that, that's all I have. If you found value in today's video, please make sure to drop a like on the video. Take care, and I'll see everyone in the next video.